Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Brian Leni, and we're going to be talking about the copper market, looking into some probably smaller companies, although some of which have gone on a run, and trying to figure out if there's an opportunity to find some higher grade copper assets. We'll also talk about a gold company that Brian has also recommended. Brian is the founder and editor of the Junior Stock Review. I'll post a link in the show notes to his website, as well as his YouTube channel, Field Notes. That is videos of when Brian is on site. Recently released a video that we linked to when we last chatted last month. Now, Brian, as I mentioned on the onset, and something you and I were talking about off mic, is some of your recent research has led you, or at least you've started to look into, the potential for copper assets, ones that are generally smaller than what we see in, I guess, more of the well-known copper assets, but they carry some higher grade. So lower tonnage, higher grade, lower CapEx could potentially separate themselves from, let's say, these half dozen to a dozen well-known copper assets that have huge tonnage, lower grade, and huge CapEx. Brian, where has your research led you?
Thanks for having me, Corey. Well, first I'll talk about what spurred it. I thought the news release from Agnico Eagle going back, I think it's 2 or 3 weeks, but their investment in 4N mining and they invested roughly 100 million for 10% of the company. I just thought it was really interesting because the senior gold companies, at least the ones that have been vocal, the Barricks of the world, have talked a lot about investment in the porphyries, going down to South America and going after these elephant of deposits. And then here you have Agnico Eagle, which I would say is at that top handful of senior gold companies. And they just took a 10% stake in a basically pre-construction stage, high grade, low tonnage VMS deposit in Saskatchewan. And to me, it caught my eye because I thought to myself, well, you know what? Maybe that is the route that a lot of these, maybe the senior gold miners, maybe the mid tiers that want exposure to copper, maybe this is the way they'll go, these high-grade polymetallic deposits that are located in good jurisdictions. And so I played with the idea, and then I started looking, especially around Canada, and consolidating a list of companies with projects that sort of fit that bill. And there's actually quite a few. So I started going through the list and started doing my own analysis. There's at least a few of these companies that just have resources. So I had to put some numbers to it and kind of see how these companies are being valued by the market. I wouldn't say that they're necessarily cheap, but it could be an opportunity because I haven't really heard anybody else talking about this side of things. A lot of the focus has been, and maybe rightly, on the much bigger projects. But those bigger projects typically come with a lot more political risk. And we all know some of the things that have happened in South America. And so this angle, looking at the smaller projects in Canada, the higher grade stuff, maybe has some legs to it. So that's what I've been looking at. And I'm sort of working my way through that list of companies and trying to come up with what I think is the best and who might be that good buyer.
So that investment you're talking about from Agnico is into 4N mining, traded on the TSX Venture under the symbol FON. That stock has been on a tear really ever since 2021. Now, Brian, when we throw around these terms like high-grade copper, a lot of people throw around the term high-grade anything, and it's kind of a gray area sometimes for what people consider high-grade. What separates the high-grade in your eyes? What percent copper grades are you looking at?
That's a really good point. I think most of the porphyry projects, let's just stick to Canada. Most of the porphyry projects, which are located in BC, you're looking on the top end of basically 0.4% copper equivalent. And that's sort of the run of the mill throughout BC. When you start getting into the higher grade stuff, I would say you're getting closer or higher than, 0.6, 0.7%. And really, it's the one and above that I would say are actually the high grade projects. But don't forget, you're talking about in copper equivalent terms. And all that should give you is sort of that top level 10,000 foot view of what the deposit sort of is. But a lot of these, especially when they're VMS, they're polymetallic. So you've got copper, zinc, maybe you have some precious metals in there too, maybe lead. And so you definitely have to do a much more detailed analysis because all these things are in different points of their metal price performance. And something like 4N mining, it looks more like a zinc mine than it does even a copper mine. And that's just from my high level view. That's how things can sort of lie to you in terms of trying to isolate high grade copper. You probably just want to actually look at the actual copper component of that and make the comparison for there. But the equivalent definitely makes it evens the playing field and allows you to look at stuff at a high level and sort of pick from a top level and then break it down.
So if you come across any of these higher grade copper assets that are in production and generating some pretty good cash flow?
No, I think the sweet spot for me is looking at companies with a resource or some sort of economic study, PEA, for instance, and do my own numbers, see how it compares, and see where the improvements can be made for the company to increase that NPV. On the producing side, I haven't really looked at it, but it's a good point because it's an added point if there's proximity that some of these things would maybe make sense. If you look at the Chibougamau area of North Central Quebec, it's a really interesting area. You don't necessarily have any producers, but you have some past producers. If you go back 2 or 3 years, I was very interested in. And the deals that would have made these companies better, meaning consolidation, just never happened. And maybe in this next upswing, whenever it does happen for the copper price, maybe you'll see some consolidation in that area and things really start to make sense. But as it stands now, you've got a few smaller companies up there that are sort of playing with smaller ton projects that could probably work on their own, but would look so much better consolidated. And sort of in that same area too, you have QC Copper and Gold, which I think has a very interesting deposit, around a 1% copper equivalent, but that's very much copper related. The gold credit is quite small, but then it's got its own sort of, I wouldn't necessarily call it hair, but question marks in terms of development that I think Stephen has to show the market how he's going to get past that. But it's a company that I've done some work on and have been commenting on in my newsletter. And that's what I've been doing, is going through each of these companies and then writing down my thoughts to my readers so they can kind of follow along. And there's no surprises when I make a new recommendation, because you've kind of seen how my commentary has gone over the weeks or months that it takes to go through the list.
So, Brian, do you see an opportunity for any sort of mid-tier copper companies to build some of these smaller assets? Maybe even if the larger companies, gold companies or larger copper companies, are looking at these assets, we have seen it before where they say, they just don't move the needle quite as much for us. Is there that hole to be filled in the copper space for more mid-tiers?
I think there is. I think there's a couple things. I think the world that we live in now, you definitely have to wonder, depending on where that mid-tier is domiciled, how it's going to affect these sorts of projects, because they're critical mineral related. So that definitely puts some question marks. I think on the other side, I would say that these companies probably want to see some consolidation in these areas before, to make these projects that much bigger. You mentioned resolution, and it is such a big thing, how they can impact the mid-tier's bottom line. And a 6 million ton project versus 16 or 17 or 18 million ton project looks that much better. And especially with the infrastructure and this hub and spoke type of idea. So what I'm trying to say is, I think you probably need to see some of that consolidation with some of these companies before you can actually attract even a mid-tier. But I think the idea is quite interesting. And I think that might be one of those holes or ways to play the copper space without taking the political risk that comes with South America, that comes with the DRC or maybe parts of Zambia, and making an impact or getting some of that upswing in copper whenever it does happen.
So it seems important to you to stick to North America. Even though North America has its own challenges, you're not looking elsewhere around the world, hey? Because sometimes you can find that there are higher grade assets outside of North America in the copper space.
For sure. You know what, Corey? So I'm an owner of Solaris. I still own shares in it. Of all the ways I thought I was going to lose money, I did not think that the Canadian government was going to be the source of share price depreciation. But that's the case. And so I think a country like Ecuador, you've got probably the best government that they've seen in terms of its approval and interest in mining in the last 20 years. I think that the things that they're doing to try to clean up the country while it's been somewhat chaotic is sort of centered into places where at least the major mining areas aren't. And so they're not that affected. Now, the relationships with the indigenous that are affected by these mining development projects can be an issue. And Konai has definitely been a problem for Solaris. And it depends on your view of whether that is legit or not. But what I'm trying to say is this, is that you have to be really sure or understand what you're getting into with whatever jurisdiction you get into, whether that's Chile, Ecuador, Peru, Argentina, Brazil, and each has its own nuance. And so does investing in Canada. I just think my interest in the Canadian market, like I said, is in this sort of segment that I don't think a lot of people are really looking at right now, and that might give me an advantage. Whereas the big porphyry projects, especially the better handful of them, most people know, and so there's no big surprises when it comes to Warwinsa or Philo or any of these top end sort of projects that are widely known.
We've seen that you need big backers to move these projects forward, and that's why a lot of these companies, I think, are well known because they put a lot of money in the ground and generate a lot of news around that. It's an interesting topic here, Brian. It's actually something I've been thinking about too, is that, look, we need some higher grade copper mines, ones that could really blow the economics out of the water, but we don't seem to have a ton of them. So I'll follow up with you in some future months to see if you come across anything else. Let's also touch on a recent pick you shared with your subscribers a little while ago. Stock has trended higher since you made that pick. It's Thesis Gold, traded on the TSX Venture Exchange under the symbol TAU. Share with us what you like about this story.
Yeah, Thesis is a really interesting company. And for those, if you rewind back, I guess it would be just over a year ago now, Thesis combined with Benchmark Minerals or Metals, I forget what the name of it was, but combined with the two, and basically their two deposits, Lawyers and Ranch, sit right beside each other, a few kilometers in distance. So they combined the companies, and really what they did is they combined a fairly developed deposit in Lawyers with very early or earlier stage Ranch project that has tons of exploration upside. And really, I think it's one of those merger deals that made so much sense. The whole premise of my investment in Thesis was this. The two companies have come together. The critical mass for them really to stand out was shown this past spring when they released their inaugural global resource that topped 4 million ounces of gold at, I think it's off the top of my head, I think it's around 1.5 grams per ton measured and indicated. And this is something that's going to be open pittable for the first portion of its life. And then you will see an underground operation. And again, I don't know which year yet, but they're doing an updated PEA that's going to combine the two deposits and how they're mined with a central milling facility. And so I did my own analysis on it. I see some really good upside in the combination of these two deposits. And I don't think that the market has necessarily given them recognition for what this is going to be. I think the production profile, when you get up over 4 million ounces and you're approaching 5 million, you're able to have a production profile like we were talking about earlier in the copper space that is impactful, that 200,000 ounce per year mark that is impactful to many different size gold companies. And especially that it's located in northern BC, not the Golden Triangle, but in sort of, I'm not really sure if it's considered lowlands, but it looks more like rolling hills than these sort of snow-peaked mountains in the Golden Triangle.
They call it the Chibougamau area, right? It's just beside the Golden Triangle. It got a lot of attention, I think, a couple years ago. I remember Benchmark very well.
Yeah, I know, it's great. It's great. And what I'm just trying to describe is the topography. It's not as quite as crazy and steeply. The mountains aren't as steep and tough to necessarily work on as the Golden Triangle. So I think from an economic standpoint, development shouldn't be that crazy. And so I think the market hasn't given them recognition. And I think that's where the opportunity is. They're going to come up with an updated PEA probably in the next 2 weeks, which will have it ready for Beaver Creek. Along with that, they're drilling at both deposits. One drill is doing infill at Lawyers, and the other drill is doing exploration drilling on their epithermal targets at and around Ranch, expanding existing areas where they've already made discoveries, and then looking at some greenfield stuff. And I think that's really where they could gain some market traction. If you look at what they hit last year, these are some really great, thick, higher grade gold intervals, gold silver intervals. And I think they're primed to catch market attention. And I would be very surprised if you didn't see a senior or a mid-tier gold miner take a strategic position in them moving forward as they move forward to a PFS and really putting the ground floor on this pre-construction that's going to come up in the next couple of years.
Okay, so Brian, when you look at something like Thesis, then with that 4 million ounce resource moving through economics, But with a drill program that still sounds like it's very much focused on exploration, what sort of category do you put this company in? Is it an exploration company? Is that going to drive the share price? Is it a development company that could be moving towards production? How do you put it in a certain category?
Well, I think it's the best of the best position to be as a developer who's got the already has the critical mass to set yourself apart from basically the most of your comparables, especially in Canada. They already have the critical mass there, but they also have huge upside in terms of exploration at ranch. So to me, it's the best of both worlds. I still call them a developer, but they've got that X factor in exploration. And I really think, well, the market, I think, is going to give them recognition for the updated PEA and what this combined project is going to look like. But then I think you're going to also garner some excitement over what they might hit at ranch and where that could go in terms of getting the size of this thing even bigger and maybe attracting the attention of the biggest of the bigs, the Barricks, the Newmonts, the Agnico Eagles of the world, in terms of this thing going over 5 million ounces or something like that in the future. So to me, it's the best of both worlds. You got your baseline protected or your downside protected by their critical mass. And then you've also got the exploration side to catch market attention and hopefully get some speculative money in it too.
Yeah, well, and as you said, right, get those majors in there. That makes a big deal for these companies, especially these ones that aren't in production that need to keep going back to the market. Now, Thesis is interesting because just recently the share price got a pop, just over the last couple weeks. But just like the rest of the market, it really seems like when we turn the corner into Q3, as good as gold is done and silver's done okay as well, these share prices, even of these companies that have been outperforming the broad market when it comes to resource companies, they've more or less moved sideways. It's been more choppy. What are you doing within your portfolio then, Brian? How are you viewing this action so far in Q3?
Well, I'll start by saying that Q2 was really good. We had a bunch of winners in the portfolio in the newsletter that gave us a lot of cash, and that has been sort of redeployed. Part of the newsletter, what I do with the portfolio is I weight each position. So they're ranked and then they're weighted. And so I redeployed some of that money into the top 5 positions. And the other I've held in cash. And I'm really happy with how the portfolio is set up. It's diversified. There is a bunch of different metals that we have exposure to, but the focus definitely is on precious metals. And I think that is where you want to be as an investor in the resource sector right now, especially looking 3, 6, 12 months out. So I'm pretty happy. I made four picks to start the year. I've got about a 10% position in cash. To me, given the landscape, the risk in the broader market, the overvaluation of tech, will the Fed pivot or won't they pivot? The war in the Middle East, all these big question marks, to me, being 10% cash or around that is basically fully deployed. And I'm still doing the research on these copper companies. I'm still looking for other gold or precious metals related companies and comparing it to what I already have in the portfolio. But overall, I'm really happy with the portfolio. And that's what I continue to watch and comment on in the newsletter. And for people interested, that's what I've been doing the last couple of weeks as we lead up to this big moment, I think, in mid-September, and what could be really that catapult to the precious metals market.
Interesting. Well, as I said, I will post a link to the Junior Stock Review in the show notes. Just one follow-up on that then, Brian. Why are you avoiding some of the other metals outside of precious metals? Is it simply because of recession fears and major market corrections potential?
Exactly, Corey. I try to be a contrarian investor when that probably means a little bit something different to everybody. But for me, those other metals that I'm still doing research on, I just want to have more clarity on where things will be headed. If we're indeed going to do a pivot, how the market's going to react, what's going to happen in the broader market. I'd like some of those things answered before I put money into some of these downtrodden sectors like the PGMs or parts of the nickel space. I'm invested in FPX nickel, but there are some other opportunities in the nickel market. But I think, again, like what's going to happen in the broader market, what exactly that looks like. I'd like a few more answers there before I put any money. And then the overriding thing is I'm just so confident in where precious metals are most likely headed. It's that potential that has sort of kept me focused there because I think that's where the money's going to be made. Like I said, probably in the next 3 to 6 months.
Yeah, man, that disconnect between where the shares are and what the gold price is doing, it's actually getting even wider, which is crazy to think of, but could be that huge potential. Hey, you're even looking into September, right? As more people get back to the office, maybe some more money flows into some of these individual stocks. It's what we've been waiting for now for a while, but hey, gold is doing its role. Brian, Leni, again, the editor of the Junior Stock Review. Check out his website, follow along with his portfolio and some of his recent picks. And Brian, I'll chat with you again next month. Thanks again for your time.
Thanks for having me, Corey.